Okay, traders, welcome back to the channel. Here we have the gold 4-hour chart in front of us. So we're going to be going over an ICT case study tailored specifically towards gold and how you can possibly trade gold using these concepts, right? So what we've had over here is we've had, of course, a recent bullish break of structure to the upside. So this break of structure was given here in this region. So this is our break of structure. So again, very quickly going over the 4 secret pillars to success, something I've gone over several times in the markets. Every video I go over this nearly. So what we want to look at again, remember the 4 pillars we have is structure, dealing range. We want to be looking at our premium and discount arrays, and we want to be looking at our fair value gaps, right? So this is how we determine overall bias in the market, right? This is how we determine overall bias. So the first thing we look at is our structure. Yes, our structure is bullish, of course, but now we understand that this sell trade itself was a sell case study taken from this region over here, right? So this now becomes our region to look for potential sells. We are above an old high, right? And we understand when we're above an old high, just intrinsically, most people have an understanding of this, right? When we're bullish and we have a high, what happens over here is we have a retracement. Then when we break above an old high, again, we have a retracement. When we break above an old high, again, we have a retracement. And this is very important to understand and take into the markets itself, right? So again, what we have over here is we have a break of structure to the upside. So let's label that BOS, or BOSS for short, right? Now, the next thing you want to understand is our dealing range. So our dealing range is very simply put, the most recent swing high, which is up here, and the most recent swing low, which is of course down here. So this is the lowest point before the breaker structure, looking at most recent structure, right? I know gold has been bullish forever, right? But this is looking at the most recent structure, which is still perfectly valid when it comes to determining a bias. So now that we have our structure, we have our dealing range. Now the next thing we do with the dealing range is we project the Fibonacci tool from the swing low down here all the way up to the swing high like this, right? So this gives us our 2 regions, right? It gives us, of course, our 50% level, and this gives us our premium up here and our discount down here, right? Very important to understand that. Now from here, last but not least, again, what we identify as our fair value gaps, which I've already identified on the charts over here. So the fair value gap is over here, marked out in blue, and of course this gives rise to a 4-hour POI. So this 4-hour POI is valid for 3 reasons, right? Because number one, we see a break of structure to the upside. Remember the 3 rules of a POI. We see a break of structure to the upside. We see a fair value gap, and we see it being priced in the discount, which also meets our rules. And so from here, as we're above an old high, this sell trade or sell case study essentially looks to sell above an old high down into a discounted region. Okay, so that being said, let's go down to the lower time. Okay, here on the 5-minute chart, what we have over here is we have an M15 premium range over here. So this 50% level represents that anything above that is of course going to be in a premium. And so from here, we're going to be dissecting Tuesday, the 21st of May going into the 22nd of May, right? So this is the case study trade itself, right? And of course, what we do is we start with our Asian range over here, right? So notice how the Asian range momentum is pretty much bearish over here in line with the narrative of looking for sells. Okay, very important to understand. So from here again, what we have is the Asian range, and this Asian range represents an accumulation in the markets. Now this accumulation phase, or the Asian range, is a low volume time of day. And the most important thing to understand with the Asian range is that the Asian range itself is from 8 p.m. to midnight New York time, right? Or Eastern Standard Time. So wherever you are around the world, calibrate this to wherever you are, right? And now we're going to be looking over and we're going to be dissecting how price behaves in and around the Asian range, okay? So again, after the Asian range finishes, right? So what I recommend to all my traders and all my students in the community is that I recommend you draw a line from the end of the Asian range. That's 5 a.m. UK time, or New York time on the midnight. And what we do is we simply draw a line across like this, just like this. So this here very clearly shows you that we had the London session, right? Of course, the London session is between 8 and 10. The London kill zone, is between 8 and 10. And again, what we see over here is we see price giving us a very clear movement to the downside. This is now our bearish manipulation. So you want to ask yourself as a trader, if price does eventually want to go down, right? Price heads down like this before heading up like this. Okay, so what we see is we see price giving this is a 2-phase manipulation. So this is the bearish manipulation, right? And the purpose of this move, I often ask my traders, is When price wants to head lower, it will entice early sellers first, more often than not. So this move entices early sellers into the market, right? This is what we call manipulation phase one. This is a phase one manipulation, or manipulation phase one. And the reason for this, right, is because it's an enticement of early buyers into the market, right? So this manipulation phase one aims to entice buyers into the market, right? So once the buyers are enticed, they of course get swept out, because what we see over here is now is we see price giving us movements to the upside. So again, what we see over here, so if we label this, so I'm going to be using yellow for the 5-minute, as I often do. So the yellow dots represent 5-minute structure again. So what we see over here is we see price giving us a structural high, structural low, structural high, structural low, structural high. And now from here, we see the break of structure to the downside, right? So if we zoom into price action over here, the last low over here is what we see that gets broken over here. So this ultimately leads to the break of structure, right? BOS. And so from here, what we need to do is we need to understand what the market has done from a liquidity and manipulation standpoint, right? So yes, we've had an enticement of early sellers. These people get swept out, right? And now what we have is an enticement of early buyers into the market, right? Or we see buyers that get enticed, right? Notice how price very, very, very intricately sweeps the Asian range high, which is the importance of the Asian range and why I teach it to such depth, especially to my students in the community, right? We see a sweep of the Asian range high, right? So what we see is we see price giving a we see price giving a manipulation of the Asian range low before giving us a manipulation of the Asian range high, right? So we see early sellers enticed, they get swept out, and now buyers also get enticed into the markets, right? Just like this, buyers also get enticed, and this is what we call the Judas swing. So a quick ICT tip or pro tip is that when we are analyzing a bearish day, the Judas swing very typically occurs above the Asian range high, just like it has done over here, right? So what validates a Judas swing? Well, there's two things, right? The first thing is it must sweep liquidity, often Asian range liquidity, but it must sweep liquidity. And the second thing is it must lead to a break of structure, which it has done over here, right? Notice how market structure is shifted in this region. Now from here, the most important thing to do now is to identify the order block. So what makes an order block, right? Very quickly, the three things that make an order block is we have to see a break of structure, which we have over here. The next thing we want to see is a fair value gap. And the next thing we want to see is we want to see price in the premium of the most recent structural leg. So that sounds complex. So let's break it down. What is our most recent structural leg? So yes, we have a structural high up here, and the market delivers a structural low down here, right? So we see a structural high and a structural low, right? Structural high, which is the Judas swing high, the high of the day, and the structural low, right? So now that we have this in place, what we do is we simply, like we did on the higher time frames, the markets are fractal. We project the Fibonacci tool from the swing high down to the swing low, and this gives us two regions to work with, right? It gives us a premium up here, and anything below that will be a discount, but we need to be focusing on the premium itself, right? So this is the premium range. And the last thing, or the second thing in the list I gave you, is that we must have a fair value gap in price, right? So again, the fair value gap itself, look at the EQ, right? Price is going to come at least to the EQ in the premium range, right? At least to the EQ. So this is our fair value gap over here. So the fair value gap I'm going to label in blue. So this is an inefficiency that price will look to rebalance, right? So that being said, the order block itself, I like to keep my order blocks a little bit wide, so I won't consider just the white candle over here. I'll consider the entire buy to sell range. So this was essentially my order block over here, and this is essentially the trade that was taken not too long ago, so earlier on in the week, right? So this is our 5-minute bearish order block, right? 5-minute bearish order block, right? So that being said, quickly to go over the rules, right? An order block must break structure, must leave a fair value gap, and must be priced in the premium. And that's exactly what we see over here. So this 5-minute order block was mitigated, I believe, during the Asian session, quite late in the day, especially in the United Kingdom. I wouldn't be trading at this time. But this order block itself was mitigated at this level. And as you can see, stop loss just above the Judas swing. And from here, the next question often becomes, where do I target? Where's the ultimate target? Well, good question. It's a question I get a lot from traders, right? So you need to look at this chart. You want to ask yourself very quickly, right? Where is the target from here? Well, it's quite obvious, right? If you're an ICT trader, you've been following my content, you understand that the Asian range itself is a very, very important range. And so the Asian range low becomes the next overall target, right? So this is the intraday target, giving you a 2.47 hour, so essentially a 2.5 hour trade, right? Which is where the trade was ultimately held to. As you can see, it did go down for lower R, which is not a problem. I'm not looking to catch the entire R. It's just to take what the market gives you, right? So this is an accumulation, manipulation, and distribution two-phase model on gold, right? So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.